all aboard with a nod to Ozzy Osbourne to get this episode of Plugged In up and running with my man Steve Williams.
Hey, Al.
And the CEO of Busey Bank, Mike Maddox.
Hey, Al.
Steve, can you give a PSA to the listeners about what's going on today?
Okay, so guys, it's very interesting. Al has been to the dentist. He's got some nice braces in there, and he doesn't sound himself. So we're going to have some fun with that. We're going to ask him to do a ventriloquist drinking water in a little bit. But for now, we're going to help bring Mike Maddox in and talk about the fun, crazy entrepreneurial world of regional banking. So why don't you talk a little bit about our guest, Al?
Oh, geez, put me on the spot. Well, you know, Mike's someone who's really an interesting guy. Was running CrossFirst, which was about, how many years ago were you doing that, Mike?
Oh, we started 2008. So yeah, 2008 till just recently.
Well, that was a $7 billion player. A really interesting story about M&A will start us off, if we can.
Mm-hmm.
And there's been some deals, right, Steve?
Right. You bet. So we're sitting here in summertime, and we've had Huntington Bank shares go down to Texas with an announcement with Veritex Holdings. We had a big one, merger of equal in the Southeast, Synovus and Pinnacle coming together to become a $118 billion bank. And obviously, you know, CrossFirst was a very innovative Midwestern bank coming into Busey to create now a $20 billion regional player, but one that's got some good diversified businesses. So one of Al's and mine questions, Mike, was when you look at this M&A activity starting to heat up, the bond math is going away fast. What do you think about with Busey in terms of what's the right size of a regional bank? Does it matter? You're kind of in a sweet spot now, well past 10, but well below 100. What are your thoughts on where you see the opportunity for Busey, and what does all this M&A mean for you guys?
Well, thank you guys for having me on today. And, you know, I don't know if there's any exact right size. I do know there's some sizes that aren't right. And, you know, I think the way I look at it is just below 10, just over 10 in particular are really difficult places to live. For us at CrossFirst, we were approaching 10 and pretty clear that it was going to take a sizable investment in infrastructure and people and technology to really cross 10 and do it well. And the other thing is we were a de novo franchise in 2007. Really, most of our growth was organic. And one thing that I'd really desired to have were some stronger fee income businesses. And so looking for a partner that would help us build out a wealth platform and more of a technology stack was something that was interesting. And then needed to figure out, hey, how do we get well past 10? And so finding and getting to know Busey, they had crossed 10, but not far enough to really absorb the cost that they had in the infrastructure they had invested in. And so, you know, that combined with Van and wanting to find succession, and we started looking at the CrossFirst, maybe more organic growth, more dynamic markets, combining that with a 157-year-old, really stable, solid balance sheet with a $14 billion wealth platform. You know, the map kind of came together, the cultures came together, and the business case came together.
Mm-hmm. Yeah, interesting. Al, what's the song? We want to talk about management succession. Do you have a song that kind of sums this up? Because I want to dig into that.
It's all Changes by Tupac.
Oh, that's a good one. That's a good one. So this was an interesting deal because you, as the CEO of CrossFirst, became now the successor to Van Dukeman. And how did that process work? Because to solve $10 billion, to get to scale, and to solve management succession in one transaction, that's got to feel good. And tell me about how those discussions started and how you guys put a combined management team together.
Van and I first met right after the Acquire Be Acquired conference, actually out in Phoenix, and we met, and then a few weeks later we got back together and maybe started talking about more details. But we spent a number of months really focused on do the cultures work? How do all the social issues work out? And, um, I'm 56 years old, and so the age gap between Van and I was good, and obviously Van had to get comfortable with me, and vice versa. So we spent a lot of time together, and then we got, I was in front of the Busey board, and Van was in front of our board, and you get the boards together, and at the end of the day, you know, for me, I felt like I was kind of interviewing for that next role as we went through it, and got to the point where everybody felt good about that, and then that became a part of the overall transaction, and all those terms and everything were negotiated into the deal.
Well, that's great. And Van is a client and a legend in our books. Just a great story of leadership and building that very loyal culture to his leadership. So congrats on obviously getting that role. But I think bringing some of the innovation and some of the new businesses that CrossFirst built is interesting. The other thing you guys have now is a really interesting footprint. There's a great footprint slide in your recent Q2 investor deck. Al, is there a song that kind of goes to markets? Can you give me a song that might touch on market expansion?
A song that has a fiddle in the band. So maybe a little, if you're going to play in Texas, you got to bring Alabama into this conversation.
There we go. The band Alabama with the song "If You're Going to Play in Texas." Okay.
Do you want to sing it for us, Steve?
Yeah, no. I'm really into country music. I went to the Morgan Wallen concert last weekend, so I'm getting more into country with all these Midwest banks going down into the South and Southeast. But Mike, with CrossFirst, you now have Illinois roots with Busey, and certainly you grew up in Kansas banking, but now Texas, Oklahoma, Arizona, Colorado. These are new growth markets. They look attractive from a footprint. You've been in this business a long time. The market model always matters. Who's had the best regional market model so you don't become too centralized, too far from the customer. What's your vision for the market model in these growth markets, and bluntly, how not to mess it up like so many banks have done when they've reached a farther footprint?
Well, that's a great point. You want to have the resources of a big bank, but you don't want to act like a big bank. And there's a real trick to that. And, one of the culture things that Van and I spent a lot of time talking about as we thought about partnering was how we go to market. And both companies really leverage a regional operating model. So, all of customer-centric decisions work through the regions, and we want to deliver service as close to the customers we possibly can. And I've seen organizations that try to implement more of a line of business approach, and it tends to lose its effectiveness. As I believe is you get different people with different agendas, and it ultimately ends up impacting the customer. So, we take all of our product lines and we run them through the regional leadership. So that includes wealth, treasury, banking, payments, all of that runs through a regional operating model. And that way everybody's on the same team and kind of rowing the same direction. And you bring hopefully a total solution to the client where we could help them with all their needs.
What preserves that culture have you found as a leader? Because I've seen folks say the same thing you said, and then 5 years later, they're into a line of business approach and maybe they reach a certain size. But what do you do to protect that, I guess, power in the regions when it's natural for business leaders, corporate folks to kind of want to build standards and efficiency, right?
Yeah, it's everything you do. It's processes, it's procedures, it's incentives. It's making sure that you centralize what you can centralize that doesn't impact the customer experience. And there are some things that are more tailored toward a line of business approach, and we have some of that. But the overall go-to-market strategy for us is really driven by a regional approach. And you have to empower those regional leaders. They have to control their own destiny and their own markets. And so I when we started CrossFirst, I came from a law firm background. I was an attorney, one perspective I had is, why is banking not more like a professional services firm? If you think about a law firm, you have a partner, and that partner has associates that work for them, and they have their own business within a business. And that's really how I view banking. If we have a regional leader, that's their bank. We provide them the capital, we provide them the technology, we provide them the back office support and the resources, but they're responsible for their balance sheet. They're responsible for their P&L. They're responsible for profitability, marketing, all those kind of things. And, banking is local, and that's where people screw it up. And you can't forget that. I mean, if I'm trying to dictate from Kansas City what our bank's doing in Phoenix, I just can't do it. I've got great people on the ground there that know way better than I do what the best strategy is. And so we have to hire great people and empower.
Love it. Yeah. And I think with technology, there could be a new chance to do this even more efficiently and not have to take so much central control, but do it in a standard way with tech.
Just think about what we're doing right now. I mean, we're in 3 different cities having a conversation, and it feels like we're in the same room. I mean,
right.
It really does allow us to manage remotely better than we ever have been before.
That's right.
And so it brings everybody together.
You mentioned Busey's $14 billion wealth management platform. Al, do you have a song? This is an interesting topic, but I need a song.
I don't even know if I can say it. I can sing it. It's Hey Jealousy by the Gin Blossoms.
Hey Jealousy, I guess, because I think most banks would be jealous of a $14 billion wealth
I'm
management
jealous
platform.
of it, Steve. That's crazy.
Mike, here's some of our thoughts. It's interesting. You think about the old classic bank trust business or fiduciary business, but we live in a world now where whatever everybody says about all the problems of the world, there's been tremendous wealth creation the last 20 years, but also you have more companies owned by private equity than public market cap these days. You're seeing that really facilitate a lot of liquidity, succession in the kind of businesses that a Busey or a CrossFirst would bank. So I got to see that you're seeing opportunities across your footprint for people who have this newfound wealth or liquidity and don't have active management. In a nutshell, what's your strategy there? Where do you see opportunity? Because that could be a real differentiator for franchise value.
Massive opportunity. And one of the main things that really attracted me to partnering with Busey was that wealth business, because at CrossFirst, we had really built a private bank, commercial bank with high net worth individuals. And it would kill me when we would have a successful commercial customer exit their business, put the money in the bank, and then 2 or 3 weeks later, it was gone to a wealth shop. And so to have the ability to really take the customer from soup to nuts and be able to help them all the way through their journey, from building their business to liquidation of the business to making sure they have their estate tax planning right and business tax planning right. Van says something a lot, and it's really, really wise, is we can make a customer more money by making sure they have a tax efficient plan to transfer their business and their estates than we ever can picking stocks or making investment decisions. I mean, so, there are so many wonderful business operators out there that just are head down running their business, that don't think about what happens when we transition it and making sure that it's structured right to do that. So having the investment capabilities, but also the estate planning, the tax planning, all that stuff that really goes around the client is huge. And we're already seeing a lot of success in our, what I'll call the legacy CrossFirst markets with wealth. We've already hired 4 individuals. In the first 45 days, we've almost brought over $100 million worth of new assets under management in those new markets. And so really, really couldn't be more excited about that.
Yeah. One thing I'm seeing for traditional folks in trust is, what used to be the average size account in this new world with this liquidity is, bigger accounts out there from all that entrepreneurial business. And it goes so nice with commercial banking. It really does.
It's such a great fit. And, if you can offer a a family office suite of services to a customer that maybe is not big enough to have their own 10-person team. It really cements that relationship.
Well, it'll be great watching that and seeing how you bring technology and other things to that business. Speaking of tech, there's been a lot of activity, Al, out there. I think this little thing in Congress been bouncing around called the Genius Act. Do you have a song that would kind of touch on all the new things going on with coin and blockchain and the collision with traditional banking?
I mean, Sir Elton, I'm still standing, right? Elton John.
That's a great song. One of the best MTV videos of all the time, by the way. But yeah, we think about May of 2022 when FTX failed. And at that time, I think Tether was the number one stable coin. It went from a valuation of 100 to 10. I would not call that very stable as a coin. But now we've really got the banking system and Congress engaged in a blockchain use case around stablecoin. What the listeners may not know is CrossFirst was very innovative in payments and banking as a service. You've been down this road. You probably see opportunity for the new environment, Mike, better than most regional banks at this time. So you've got a business called FirstTech that you were instrumental in building. How do you see technology innovations, Congress getting involved now in stablecoin, connecting it to the regulated banking system with your FirstTech business, which you highlight quite a bit to investors?
Yeah, FirstTech is a payments company. It's really a legacy Busey company that they had for about 20 years and really focuses on online payments, merchant services, and still, believe it or not, the traditional lockbox, e-lockbox, and integrated payable solutions. So, how you move money and collect money for clients is a big deal. And, the Genius Act is going to bring stablecoin into that process. And it's my hope that, once the rules are written and some of the regulatory framework comes around it, it'll be another efficient payment tool for banks and for clients.
Mm-hmm. Do you think this is the liquidity threat that some banks worry about with, if Amazon, Walmart, Microsoft can build coin, that it takes some of the liquidity sitting in the banking system?
I think it's something we certainly have to watch. And, I'm hopeful that as all this develops, that the regulators and folks in Washington will see the need to have a strong banking system and to have that liquidity in the banking system. And hopefully, the rules will be such that, this will be the next thing we figure out. We do it together. But, banking has been pretty adaptive over the years and pretty innovative. And I think customers are going to have to be shown that this is a more efficient way to move money than what we already have. And I don't know that that's the case today. And as I understand it, there is market risk. You put money in stablecoin, it doesn't mean a dollar is going to be worth a dollar. And if you have the money in the bank, you've got insurance and everything else, you know what it is. So we're all going to have to get educated on this and continue to learn and see how it all fits in.
Yeah. Well, hey, Al, I know this has been a great discussion. What's your take on the prospects for a $20 billion bank in this new world, the coming together of CrossFirst and First Busey?
Oh, I'm super optimistic. Just watch this. Great combination, right?
Thank you. We think so. From a financial metrics standpoint, from a culture fit, we're really pleased with how things are going. And, integrations are not for the faint of heart, and putting two big companies together is not easy. And our teams have done a great job, and there's been a lot of hard work put in. But we really feel that with our footprint, with the balance sheet, the capital position we have, with the liquidity position we have, we're really poised to be able to take advantage of what, I think is going to be continued consolidation over the next 10 years.
Yeah. So sitting here, $20 billion bank, a 1.2 ROA, of 13.6 ROE, 55% efficiency ratio. And I think what we try to highlight today, some really innovative business opportunities and a great footprint across the Midwest and the South. The bank stocks are still trailing the general market, and you're starting to see the price earnings come up. But let's hope that the world wakes up to the fact that this isn't your grandpa's old bank. And I think, Mike, you've really helped illuminate that today on Plugged In. Thanks so much for joining us.
Thank you for having me, and really enjoyed it today. And Al, I hope that that the Novocaine wears off here pretty soon. So at least by dinner time.
Oh. Yeah, maybe we'll get him a T-shirt that says Novocaine Al, but it's at least you brought the music, buddy. You brought the music, and that's what Plugged In's all about.
Well, thanks, guys.
All right. Thank you, guys.
Thanks so much.
If you enjoyed today's Plugged In episode, make sure to hit that follow button on Spotify, Apple Podcasts, YouTube, or wherever you're listening. We've got more great conversations coming up, and you won't want to miss them. Thanks for tuning in.